David, I wanted to talk to you about the crypto space. It's something you moved into a couple of years ago with LMAX Digital. I guess we can move on to what your experience has been over the first couple of years in a while. But one of the hot topics in crypto is this institutionalisation of the market. In terms of the flow you are seeing and your impressions, how much is the institutional space permeating crypto at the moment?
It isn't. I mean, I'd say the penetration and the potential is, we're probably at 1 to 5% of what it can be. Look, so LMAX Digital we set up purely for the institutional space.
Yeah.
If crypto remains a retail trading product, I guess we won't be in it. But our bet is a 3 to 5 year bet rather than a 3 to 5 month bet. Of course, you'd never choose to launch a new exchange in a bear market. We did that.
But then the fact is, at least the market was moving. I would argue it's probably worse to launch it in a market where it's like at 3,600 for 3 months. Yes.
No, so I think what's happened is that as the price crashed from $20,000 down to $3,000, then people just put a hold on their crypto plans.
Yeah. What
I'd say is all the names you'd expect are looking at it. You saw the launch of the JP Morgan coin last week. All the significant FX prop shops, Chicago, New York based, are already in the crypto space.
Yeah.
So they're ready, and they're readying themselves for the swathe of real money to come. But, I sat down with a bunch of asset managers last week, and 75% of them said, we're not trading it. But then 75% said we will trade it in the next 12 months.
Yeah.
So, look, that's why LMAX Digital was established at the request of institutional market participants. We just have to be patient. Okay. And if it never comes, then it never comes. But my belief is that certainly the back end of the digital space will permeate into the FX space. So somehow or other, we will be trading digital assets 5 years from now.
Well, do you see one or two things that will actually create that catalyst for the change and open the doors?
Yeah, I think the key bit is going to be credit. Yeah. The reality is,
this is sounding familiar all of a sudden.
Exactly, that's exactly what it is. I mean, there's no idea of a PB network in the crypto space. And look, the Satoshi white paper is decentralization and trust. So well done. We have completely decentralized market and zero trust. We're going to need to have some trust. That's why, a bank coming in is interesting. At the moment, LMAX Digital is seen to be the trusted third party. So people are facing me as a credit counterparty, and they wouldn't, and nor would I ask them to in fiat. Yeah. So I actually would welcome entry into the space from banks. Yeah. I mean, even in terms of who's banking the business, at the moment you're talking about banks you've never heard of in the crypto space. And look, they're okay, but they've got tiny balance sheets. They've got balance sheets in the hundreds of millions, right? We need the JP Morgans, we need the Barclays, we need the Bank of Americas. So that's the key to unlocking it. When asset manager can place their money with top tier bank, and that bank can then trade on institutional exchanges like LMAX Digital, then we'll have a marketplace. Whilst you're asking them to send money to a Silicon Valley-backed retail exchange, you're not going to have an institutional marketplace. Yeah.
So, I mean, in terms of growing this market, I jokingly referred to the lack of volatility, but how does that actually work when the discussions you're having with the institutions saying well, actually, is it a good thing that it's probably not the craziness of last year or the year before, but it's maybe a little bit too quiet? But I mean, is this actually a good breeding ground for these guys to dip their toe into the water?
It's a bad thing right now. I mean, the price stability is certainly a bad thing because look, the guys. Typically, it's the FX desks or FX traders who are running crypto funds. And there's just less opportunity right now. Yeah. Now, when you had higher prices, higher volatility, wider spreads, they all had opportunity. And guess what? Call it what you want. There was a lot of cross-platform arbitrage available. Yeah. But I always said arbitrage isn't necessarily a bad thing. because they put their capital at risk.
It's called market efficiency.
Correct, chasing the money around the planet. It's funny, someone said the other day, well, you haven't helped this, David, because apparently we have institutional price discovery, because it's the same market data, the same connectivity we have in fiat. So all of a sudden we have efficient price discovery, more like institutional fees, and they're saying, well, you're helping create this stability. So down the line, I think the stability is good, and we'll see that a $2 to $10 move a day is opportunity.
Yeah.
But everyone was set up to trade, well, you used to write about it, 5% moves every day.
Yeah.
You can't have an efficient capital market that moves 5% every day.
No.
So we're going to have to, the guys are now having to refine their models, and guess what? Turn on their equity models and their FX models to take advantage of 50 basis point moves.
And I guess they've got to scale the business appropriately for the new volatility environment.
Yep.
Yeah. So I guess then I look at that and also think in terms of the new firms coming in and their pricing capabilities. Do we now look at crypto in the way we were looking at FX maybe 20, 30 years ago? In terms of, we used to have some wild swings, and then as more market makers come in, then naturally spreads get compressed, volatility gets compressed. The arbitrage that you mentioned also compresses volatility.
Yeah.
Are we looking at a similar pattern here?
I think, I mean, literally, there are a lot of similarities to the FX market you inhabited, right?
Yes.
Way back then. And I think there is real opportunity for some of the older guys to dust off the Mark Paris epaulets and trade crypto. It's there today.
Well, it's a moving market.
That's it.
Yeah.
It moves around, and there are pricing inefficiencies. And sometimes a lack of liquidity that you can take advantage of.
Yeah.
But again, and you've got to have the chutzpah, you've got to have, if you like, deeper pockets, maybe to put your capital at risk around the globe. But in a way, that's quite exciting. And then you've got the other end of the scale. The best price makers are the most efficient price makers in fiat.
Yeah.
And that's happening now. And last week, I heard for the first time, someone asked if they could maybe trade on a private room because they didn't want there to be excessive market impact in the crypto space, which was novel.
Yes, I didn't see that coming.
Nor me.
So therefore, I guess, to close out on the crypto theme, with that, it's obviously the market, the foreign exchange market grew from back in the day to now. Looking at crypto is maybe another challenge. We've got the data, but we actually don't have the information flow. As in, in fiat markets, there's Newswise, and there's Twitter. But a lot of the impacts on the crypto price will come from the most random place.
Yep.
And it's actually getting to that information to be able to protect yourself against moves. Do you think that is an obstacle we need to overcome?
I think it certainly is. I think efficient price discovery is getting there in terms of the market data. I think the market information, there is still allegedly a lot of OTC deals being done.
Yeah.
But I think less than when we talk about it. So you see these spikes and you're not quite sure where they've come from.
Yeah.
Like the last one this week, people are watching this, I guess we're looking at the week of 20th of February. You saw the jump from 3,500 in Bitcoin to touching 4,000.
Yeah.
No one really knew why. The assumption was it was the launch of the JP Morgan coin, but that was a week old.
Yeah.
So I think it literally was
7-8 days quicker than that.
Yeah.
Yeah.
So I don't quite know where we go for that, and the pump to 20,000 was certainly, a lot of that would have been on fake news.
Yeah.
There was an awful lot. You talk about Twitter, you talk about social media. You see an awful lot of pump and dump.
Yeah.
In the crypto space, which isn't good.
No.
I don't know where do we need news outlets? Do we need the industry press such as yourself to have a more efficient market news stream?
Yeah.
Quite possibly. But let's still remember it's still very, very early days.
Yeah. But I guess what we're talking about here then is ultimately to get these institutions into place, you need to create an environment in which those institutions are comfortable in themselves. They may be very, very experienced traders, but they like to have that comfort blanket of, well, I know where my information is coming from, I know my market data's here.
Yeah.
and I know how my liquidity pattern is X.
That's going to be, I guess we're all used to the waiting periodically for central bank news, right?
Yes.
Or news on the economy. I don't know where we're going to get that on crypto. But whoever's running the various blockchains maybe needs to start thinking about that.
Yeah.
And that goes away from the whole ethos of decentralization. But if they want their blockchains to be efficient, if they want their coins to be efficient, there's going to have to be efficient dissemination of information. So not just what you see at the moment, which is the pump and dump.
Yeah, so they have to evolve their model maybe back towards the world they're trying to get away from.
I would think so.
They've got to embrace the man.
Sounds good to me.
No, thank you very much.
Thanks, Colin.
Cheers.
Cheers.